what's up, my beautiful people? It's your boy Devo, some motivational, back with another Monday's watch list. And today we'll be going over what I expect to see going into the new week, some news that we have going into the new week, and then I'll also be showing y'all my strategy full out play out on Friday, and I just did not take the risk and did not take the trade, which would have produced some massive profits. Okay, and so we'll be going over all of that today. And again, thank you all for sticking with me and following with me on this journey. Thank you for all the likes, the comments, all the new subscribers I'm getting. We're up to 50 now. Let's get it. Now we're trying to itch for that 60, then 75, and 100, and eventually more and more. Right. So again, I thank you all for sticking with me through the journey. All the likes, comments, subscribes, the views, it all means a lot. I really appreciate you guys. All right. So now let's get into it. All right. So first, I want to take y'all into the trade that I didn't take on Friday, and I just want to show y'all how my strategy just keeps showing y'all why these fair value gaps. So the reason why I show you these trades that I was looking at taking but didn't take sometimes, like I know I've done it a couple times, like this one, and I've done it a couple times, but also I showed them to you because they reiterate my strategy. They show y'all why I look for these fair value gaps, why I look for these order blocks, and why you don't want to get caught up in the chop. You want to wait for the trend. Okay, so it also shows y'all why I have these support and these resistance lines marked out, because whenever I show you these trades that I was gonna take or I should have taken, it just shows everything, like why I have these zones marked out and why I wait for these fair value gaps and order blocks. Okay, so excuse me, let's get right into it. Okay, so to come into Friday, I was waiting for the clear trend. Right, we started in the middle. Let me look for where we started at. Okay, we started off right here. Right, we dropped down, came up, right, dropped back down, came all the way back up, dropped back down. Right, so you see we're just in the middle of this resistance and this support, this $3 move. Right, you don't want to get caught up in this chop. We want to see it break a support and go one way, or break a resistance and trend away. And you trend, if it breaks the resistance, it wants to trend up. If it wants to break the support, it's showing that it wants to trend down. Right, so that's what we wait on. Right, and that's exactly what I was waiting on. I waited through all this chop. We finally got the broke up. Oh man, and it's frustrating, right? I always tell you I get a little frustrated, but it's frustrating even going back over the move, because I was gonna buy 3 contracts, and this is where I can tell you the exact numbers. So even if like you probably don't believe me or anything, I'm just gonna tell you the exact numbers on these contracts that I was looking at buying, and I just didn't, and I'm gonna tell you where it would have went to. Okay, so right here it broke this resistance. Right now, what am I looking at? This fair value gap. Why? Because this is also sitting on this resistance, and you see whenever price likes to break these resistance and supports, it always leaves a fair value gap near that area. Right, why does it do that? Because you need a big area of buyers or a big area of sellers to break them areas. Okay, that's why you usually see these fair value gaps at this place, because you're not going to get a little chop through it. No, you need a surge of buyers to break a resistance. Right, because as you know, resistance have heavy sellers there. Right, as you see, we jumped up, it pushed it back down. We jumped up, it pushed it back down. Okay, so that's where sellers are at. That's where big sellers are at this resistance. So you're not going to get these little chops through it. You're always going to have some type of big candle flush through it. You get what I'm saying? And that is why you usually have a fair value gap at that place. Right, and that's exactly what it did. Broke through it, left the fair value gap, came down, retested this resistance, making it a support, making it an area of support, also testing this fair value gap, giving the run up. Okay, and what did it do after this run up, which you could have profited off this move, which I was going to get in? So look, let me tell you, I was going to buy 3 contracts right here for $327. When we shot up all the way right here, those contracts, the last time I looked at those contracts, when we were like right around this area, it was at $305 for that contract. So three of those would have been $915. I would have made about $600 off this move, man. And that's where it was a little frustrating, but at the same time, I'm not too frustrated. Why? Because it's just reinforcing my strategy, just giving me more confidence. Why? Because on Monday, what did I do? I hopped in on my strategy, but I just took profits and I hopped out because I didn't want to lose a trade. But ultimately, we seen that if you followed my Monday video, please, if you did not watch it, please go watch it so you know what I'm talking about. On my Monday video last Monday, you seen that it gave like a probably I think it was like a $6 move in the direction that I already had hopped in at, but I didn't want to lose no money, so I just hopped right out, giving me about couple dollars of profit. But if I would have stayed in that move, I would have been up big, okay? Excuse me. But I'm not too mad because it just reinforces my strategy. Shows me that what I'm looking for and what I'm being patient for and waiting for, it's worth it, that those things pay off, okay? Because I was waiting the whole day for this, as we could see. And 9 o'clock, 10 o'clock, this happened right around 11 o'clock, this move. I had to wait all day for it. And it did exactly what I was waiting for. Because I even seen some of the most successful traders get caught up in this chop. And I'm like, how do you get caught up in that? Right? Because this is obviously, it's just bouncing from support to resist. It's not giving no clear trend. But when it broke it, this is where I could have capitalized and been like, Devin knows what he's doing. You know, it would have been good for me to get in the move, but also it's still good for my psyche because it just shows my strategy working, right? So right here, those three contracts were worth $327. I'm not gonna say I looked at it at the exact top, but it was somewhere around this area. For those three contracts, it was $950, around $15. It was over $900 for those three contracts. So I would have been up about $600. Okay. Again, just learning from it is just showing me how I need to trust my strategy. I need to trust myself. I do not study these markets. It's showing me that I do not study these markets for nothing. I do not look at all these things for nothing. That I need to trust my strategy and trust what is going on, right? But why did I not take the trade as well? Because when we had this pullback, we seen that there was just not a lot of volume breaking through. As we see these, I was looking at these volume bars and it was just so low, right? And then whenever we had this red volume kind of be bigger than these buyers. So that's what was kind of throwing me off. And then even when we were getting up here, we see these buyers are smaller and smaller, like this half the candle size. So you see what I'm saying? And as you can see, through all the up move, you see the sellers are always bigger than the buyers, right? But it's still moving up, right? So that's where I'll get further into the video, but that's why it was kind of like iffy for me to trust it. But at the same time, it's your strategy, right? But volume is part of my strategy. I want to see, what do I want to see? On my pullbacks, I want to see lower volume. So on my red candles, I want to see these red candles on my volume smaller than my green candles, right? I wasn't getting that. That's what made me iffy on the trade. But you still got to trust your strategy. You still got to trust what price action is doing, okay? So that is really one of the 50%. So I'm not going to say that was just only it. 50% was just was nervous, didn't want to risk money, right? But another 50%, probably 60%, was the volume candles, right? I was looking at the volume candles and looking at it, and it just made me really iffy, right? But you got to trust price action. You got to trust your levels that you mark out for reasons, not just putting them there just to put them there. You mark these areas out for reasons. You got to trust that. You got to trust what your strategy is. You got to trust your supports, trust your resistance, and trust what you're doing. Okay, trust your analysis on the market. Okay, it's not going to always work out, but your strategy is supposed to help you win more times than you lose. And even when you lose, you're going to lose less than your winners. You see what I'm saying? That's why we always go for the 2-to-1 ratios, right? So this is where I would have hopped in at. I would have hopped in once I started getting this wick, and it's starting to wick this area, right? So I could raise this entry probably up to like this wick area, like probably a little close to the body of it, right? I'd put my stop loss on the bottom of this fair value gap, right? Because that's where I would get stopped out at. And I would put my profit to loss honestly, since you broke out of this area, excuse me, since you broke out of this area, my next resistance is this 553, right? So really, your goal is to get all the way up here, but I mean, you're not really looking at it to get all the way up there, right? And so even if I would have caught up, so you are looking for the move to go all the way up to this next resistance, but you know you probably won't get from 544 all the way up to 553. You know what I'm saying? You know, some days you'll get those $9 moves, but not every day, right? So you won't always have, you won't wait for it to try to reach all the way up there. You won't wait through this whole pullback and then still hoping that it's just gonna pull. No, I mean, when you start to see these heavy candles start to break up against you, that's when you want to take your loss, right? I mean, that's when you want to take your profits. That would have been a win, right? And so if I would have put my green candle right up below this heavy red candle, right? This heavy red candle right here, that's still a what? That is a 3-to-1 risk to ratio. So that means 3 times whatever money you put in, and that's exactly what it was. That's exactly what it was, right? Because I would have bought 3 contracts for $300, 327 to be exact. So y'all can it's me trying to make you believe me, but if you want to believe me or not is up to you, right? So the $327 was for the 3 contracts that I was looking at, and when we got up here it was around $900, and this right here proves this to be true because this is giving you a 2.99 rounded up to 3, a 3-to-1 risk ratio, okay? And so that just reinforces and just kind of tries to, that reinforces to me why I trust my strategy, why I look for these fair value gaps, why I wait for it to break my supports or break my resistance to capitalize off these moves. And also it helps me show you guys on why you want to wait for those breaks of your support and resistance and wait for your pullbacks to test your area of resistance, making it a support, also testing this fair value gap and using it, okay? And then also, look, what is this big move coming down? After you would have took profits right here, what is this big move coming down? Well, for one, what can we see? It tapped another fair value gap, right? But if we actually come into our 15-minute, what is that doing? That is tapping an order block. That is tapping an order block. So if you wanted, if you didn't even feel good on this pullback to your fair value gap, this move all the way down to your order block, which this one is one that I wouldn't have been more confident in and a trade I wouldn't have taken, but it just shows you how these fair value gaps and order blocks have the power. You see what I'm saying? So it came down and it broke through that area of support, right? You don't want to see it break through your area of support, right? You want to see your support hold up. So that's why this fair value gap was a good entry, because it hopped in at this fair value gap and made this resistance support. So that's why this was the good move, right, to be in. When it pulls down, yeah, you're coming down to an order block, but you're also breaking through this area of support. You're breaking through, yeah, this area of support again. And as you can see, it didn't even have as much power. It tried, but it didn't break structure again. Why? Because it didn't make another higher high, right? So as you see, this order block didn't have enough power to push it up past this to make a break of structure, right? Because it already used this fair value gap to break structure, and it broke through this area of support. So you see these sellers were holding up. These sellers are strong right here, right? As we can see, again, through this up move, you see this volume is very low. But through this down move, you see these volume candles are bigger. And then through these, the price action looks heavy, right? But you see the volume is still lower, right? And so that is going to go into some more of what I'm going to tell you guys, okay? So, real quick, let me just go into what I can see going into tomorrow. After this, so these last 3 days, the Wednesday, Thursday, Friday, we've been having the pump through the market, right? As we can see, pumping. We're pumping up, right? But this ties into the volume thing, right? Because what are we not getting? We're not getting our volume. So that's also tying into something else. I don't think we are completely out of the woods yet, okay? So I think we were just having a little bit of relief, right? We're having a little bit of relief, a little bit of a dead cat bounce. What is a dead cat bounce? Whenever you get sold off so much that the buyers step in, right? You end up so far down into a level where the buyers step in, right? And so that's basically all it was. You came all the way down to a level where these buyers just stepped in, right? They defended it because you were falling so hard, right? Because again, where were we down from all time highs? We were all the way down to 21%, right? So we were getting pretty far, right? We're not officially in a recession. Um, we're not officially in a recession. And remember, this whole down move is because of tariffs. It's not because of the actual economy was just doing horrible that we had to get a sell off or fall into these things. This is all tariff induced, right? And so we have to get more clarity and get more things on these tariffs and stuff like that before these sellers like to push it back down, right? And before the sellers want to push it down a little further, right? Because so that's basically all it did. These buyers stepped in because we were so far down. These buyers stepped in, and that's all we're getting right now. I feel is a relief, right? Because we still don't have the volume. We still don't have the volume, right? We still have these heavy sellers, and as you see sellers, and then as you see where we had the dead cat bounce, these buyers stepped in, right? But as we're falling, we don't have the buyers like that, but we are getting a relief, right? So I feel like that's what it might be. It's just a relief, a little bit of relief. That's why I have this resistance at this 570 level right here, where you can see wick, kind of at the start of this whole, well, not the start of this wholesaler move, but you see it's a big level where we would have to break out to kind of, but in order to break out of that move, we will need some more clarity from Trump and China through these. Um, we will need more clarity from them, and we will need to see the tariffs dropped and some rate cuts and stuff like that. Because right now, we are not looking. We're getting some relief and getting a pump through the market, but we're still not out of the woods. Okay, so let me just go into a little thing on what Trump said, and I'll come back to these markets real quick. So this was a little older. This isn't just brand new, but just want to read it to you guys. Okay, as investors face tariff uncertainty, President Donald Trump remains committed to the strategy, even suggesting tariff revenue could offset the federal income tax. There's a chance that the money from tariffs could be so great that it would replace the income tax, Trump said in an interview with Fox on April 15th. It's an idea Trump floated during his presidential campaign in June at a meeting with Republican lawmakers. Change to the income tax would require congressional legislation, right? So that is good and bad news. So it's basically Trump is saying he's not getting rid of these tariffs, right? He's not getting rid of the tariffs. They're not going down to 0%. And so it's just uncertainty right now, right? We don't know how the economy is going to be without income taxes because, yeah, there's more money in our pocket, but we don't know how these things are going to really affect, right? So basically, Trump is saying with these tariffs from these countries, he won't need the money from the U.S. citizens, that he'll be able to give more money back to the U.S. citizens, right? So that could be a good thing, but it's still uncertain, right? We don't all really know how this will all work out because we haven't been from income tax since what, I think about 19 something or probably later on, right? Whenever income taxes actually came into, right? And so right now, let me just tell you what I believe. I believe we're getting a little bit of a rally, right? And I think we could still continue this on Monday, right? You see this area of resistance right here. We're in the middle. So we can either see, and it's not a just Devin, you're saying that the market can go up or down. I mean, yes, because the market can go up or down, but we have these levels again to show us, okay, if it hits this level and it gives us a change of character, or if if it hits this level and, yeah, if it hits this level, gives me a change of character and gives me breaker structures to the upside, you know which way it's going. If it wants to hit this level, give a change of character and start trending downwards. You see what I'm saying? So yes, the market can go up or down, right? Of course, but we have these levels marked out so we can have a good idea on where it actually wants to go, right? So on Monday, I could see us actually getting a pullback to start the day. using the support and try to trend up, because I think we are still in a little bit of a relief, right? I think we're in a little bit of relief, and that is why we DCA into our positions. That's why we don't just, okay, I see the market going up. I see the market going up. Let me just throw everything in. No, that's why we want to DCA into our position. DCA, because we never know. We could be having this relief, and then Trump could come out and say the tariffs are off, and then we will actually end up exploding up, right? We will actually end up exploding, right? But if we still get a whole bunch of uncertainty, which right now I see us giving a little bit of relief, trying to climb up. But after a while, if we're still getting a lot of uncertainty, I can see us breaking back down, right? And remember, I gave you guys analysis on what I think can happen and what I see through the charts, but this is also analysis because I watch other people too. I watch people that are smarter than me, people that have done things longer than me, people that have been on the charts longer than me, people that have been investing longer than me, people that have been day trading longer than me. So I also get analysis from them, and I don't just come on here and copy what they say and give it to you guys, but I listen to what they say. I reason with this, see if it reasons with what I'm seeing in the charts, see if it reasons with my logic, see if it reasons with the news that I'm looking at, and I try to go based on that, right? So I kind of combine everything I hear from all these like people that have been doing it way longer than me. I combine it with charts, what I'm looking at through the charts, my experiences through the charts, what I'm seeing through the news, and then I make a educated guess. You see what I'm saying? So anything I say or anything everybody says, we don't really know exactly to the T, but we give you guys good analysis or our best analysis on what we see, and through our experiences and through our analysis and things through the market studies through the markets, what we can see. Okay, so why would I see a little bit of relief? Why? Because look, let me come down to the weekly, right? Because you would say, Devin, well, if there's still uncertainty, why don't we just keep dumping? Why don't we just keep dumping? Why are we getting this relief? Well, you have to get some type of relief, right? You're not just going to straight just fall, and then just fly up once Trump says something good, right? You're going to get a little bit of uncertainty, right? You're going to get that uncertainty. Look, so back in the 2022 bear market, right? We got a dump. We had a big relief, right? From 417 all the way to 460, right? Then we had a dump all the way back down. Then you have a relief, right? So you have to get these little bit of relief. You're gonna have areas where these buyers step in. You're gonna then it's gonna dump back down if it's still not. Well, 2022 was just a bear market, right? But that's exactly what's happening. We could be falling into like a little mini bear market. We're still have these recession odds, right? We're still in recession territory, right? We had good earnings from Google, which is good, but the experts are already saying and things like that. We already had negative GDP in the first quarter. The second quarter, if this is negative GDP, that will be considered a recession, right? And so I feel like that's kind of what the market is looking for as well. All right, Trump, we're giving you a little bit of time. We're getting a little bit of relief. Getting a little bit of relief from these markets. We're not just going to straight keep dumping. We're getting a little bit of relief. But if these tariffs don't get worked out, and if we don't get clarity through these markets, we could start to see, and especially if we fall into the second quarter, if these tariffs and things aren't worked out by June, that and we have a negative GDP, we will start to make another lower low. And remember, guys, I said I could see a lower low coming, and that will be that lower low. That lower low would be coming from Trump and China's tariff war. Because remember, we still have 145% tariffs on China, 10% import tariffs on the rest of the countries, right? So 10% is not bad, right? And the experts and the experts on social platforms and stuff like CNN, CNBC and stuff, they said the market can deal with 10% tariffs, but that 145%, you can't deal with that. 50% tariffs, you can't deal with that. That's too high of inflation, right? We will have too high of inflation, okay? And so that's what I believe can happen. We could have a little bit of relief, right? We could have a little bit of relief, but if By June, by our second quarter GDP, if these things aren't worked out and we have negative GDP, we will start to see this lower low. Okay, so for a little bit, we can have a relief rally. But remember, guys, we're not completely out of the woods. Okay, we are not out of the woods yet. So don't just start throwing everything you have into these positions. And honestly, what are we looking for? As investors, we want a lower low. Why? We will lose a little bit of money, right? Because we have some positions, we'll lose a little bit of money. But why? Because we want to buy during these big old red days, these big old red months, these big old bad moments, right? We want to buy through here so we can enjoy these run ups, right? Because again, from here, from this bottom all the way up, you're up 75% on your money. Even now, where we're at right now, you're still up 57% on your money. Even at the lowest point we were at during this little, I'm not gonna say during this little, but during this trade war we're having right now. Excuse me. Even through this trade war right now, we would have still been up. Even through the lowest moment of this current trade war we're going through, we would still be up 40% of our money at that low that we have, right? And if we make a lower low, say if we come down right around here, we are still up 28% if you would have bought through these bottoms. You see what I'm saying? So don't be scared when we have these lower lows, right? Matter of fact, embrace those. Buy a little bit. Keep DCAing. Keep DCAing into your companies, right? So right now I'm kind of cautious on buying right now, right? Because we're having the relief rally. We're not out of the woods. Not even I don't believe we're out of the woods. We're not out of the woods yet. We don't have clear news on what's going on, right? So I'm still cautious because I know we can run into a resistance and it could knock us back down, right? So I'm not throwing a bunch of money into my investments. I'm actually holding back and I'm actually seeing my account just run up, right? And honestly, right around this area, if I don't see things worked out, and I see a big red candle start to produce on these daily and weekly, I'm actually going to probably take some profits and actually probably bail out of positions, not completely, but take some money out of these positions so I have dry powder to invest during these bigger red lower lows, okay? So what can I see tomorrow? Just reiterating what I can see until tomorrow. Let me come back down into my 5 minute. So remember, on Friday, what was I looking for? This was a bunch of chop. We are fighting through this resistance and this support. So we don't trade that. That is chop. That is ranging. We equal highs, equal lows. We do not trade that. Once we see it break out and come down, give me my retest on my area resistance, making it support, also this fair value gap, that is when you hop in and you let it ride until you get uncomfortable and you see exactly till you get uncomfortable. Whenever you remember in one of these shorts and in a previous video I had, whenever you start to get uncomfortable, bail out of your position. There's no rules on when to take profits, right? You want to be risking though. You want to make sure. Sorry, I'm trying to find this exact tool. You want to make sure that you are getting a 2-to-1 ratio at least, right? And this would have been a 3-to-1, right? So whenever we hopped in right there, we would have been looking for our 2-to-1. So I'd have been like, okay, I want price to at least hit this. I want price to at least come and hit this 549.75 area for me to hit my 2-to-1 ratio, right? And once it breaks past that, you could take a contract off. You could take half your position off, and you could let the rest run until you start to see big red candles come against you, right? And that's good. You would have been in profits, right? Or you can just let your whole position ride until you get uncomfortable, and boom, at that red candle, you would have been up 2.773 to 1 of your position size. It would have been a 2.73 to 1 risk to ratio, right? Risk to reward, right? So that is very good. Okay, remember, you want a 2-to-1 risk to reward ratio because you only need to be right 50% of the time to be profitable, right? If you have a 3-to-1, you only need to be right what? You only need to be right 33% of the time to be profitable, right? I'm not exactly sure how that math works, right? But if you have a 2-to-1, you only need to be right 50% of the time to have a successful win rate, right? So that is awesome. That is how we stay in the game and we keep our losses small, right? Remember, we're not going to lose even 100% of our money, right? But it's called a 2-to-1 risk to reward, right? But this stop loss is at the bottom of your fair value gap, and so you control how much you lose, right? So if I would have had 750, I would have made 1600, but I would have only lost 89 bucks. That's how tight that stop loss is. Not because I just have a specific amount, but because whenever you get in at the start of your moves, and like say whenever you get in at the start of your moves, you can have such a tight stop loss like that because you know if price breaks my fair value gap, that means it's not trying to continue trending up. If it breaks my previous resistance, making it support, if it doesn't make it a support and it breaks that fair value gap, it doesn't want to trend in my direction, right? And so that's why you want to get in when that move starts and gives that pullback. You want to get in at that first area of structure because your stop loss can be so tight, right? And your reward can be so much bigger. You see what I'm saying? And so let me just go in further what I can see tomorrow. So tomorrow, what can I see? I can see us actually starting off and giving us a little pullback, trying to test this area of support before giving us a change of character and then trending up, right? Or what can price do? Price can just want to start off tomorrow, probably come down a little bit, touch this little area, and trend up, right? And if I see it trending up, remember, I'm in my 5 minute now. The 1 minute I come down just to get that sniper entry. And as you can see right here, boom, 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 sniper entry. That's where you get your sniper entries right here. You would get it perfect. You see what I'm saying? You see that wick, you see your fair value gap, and then you have your stop, and you have your risk to reward thing right here. Risk to reward, what is this, indicator on. This is where you get a sniper entry so you can actually be able to ride your profits up longer, right? And so look, this is where you would have got out at, right? So once you see it riding up, you see it rolling over, and you see this big candle start to wipe all these, you start to see this big old engulfing candle, you can cut it mid candle. Don't even wait for that whole candle to continue dropping, right? Cut it. Once you see it engulfing more than 2-3 candles, cut that and you will enjoy your profits, right? So I would have cut it right here and I still would have been able to enjoy a 2.5 risk to reward, right? And so that's what I'm saying, guys. Control what you can control, right? Get in at these fair value gaps on the start of your moves. Get in at these structures so you can have a tighter stop loss and you can be able to have your risk to reward, right? And remember, you always want to use this so you know what you're getting, right? You don't want to do a 1-to-1, right? Because you got to be right so many times in order to be profitable, right? Because if whatever I'm putting in, I'm getting whatever, if I'm risking $1 to make $1, that is so, I don't really know how to I'm trying to find a way to explain it. You always want a 2-to-1, at least a 2-to-1, right? Because whatever dollar I'm putting in, I'm risking it to get $2, right? I don't want to risk $1 to get $1. Risk $1 to get $1, right? You want to risk $1 to get $2, right? Risk $1 to get $3. Risk $1 to get $4. Risk $1 to get $5, right? Those are what you want, right? Because I'm not exactly sure how those percentages work, right? I'm not too good with all of that. But when you have a higher risk to reward ratio, you don't have to be right as much, right? Whenever you have a 1-to-1 risk to reward, you have to be right. Oh yeah, okay. When you have a 1-to-1, if you have a 50% win rate, you are still break even. You don't even make money. So that means you have to be right 6, 7. You have to have a 60, 70% win rate just to become a little bit profitable. The best traders in the world, the best trader that I know is Ross Cameron. He has a 66% win ratio. So you have to have a Ross Cameron you have to have a Ross Cameron win rate to become a little bit profitable. And remember, you're only getting a 1-to-1. So if you're winning 70% of the time, it's still a 1-to-1. So still not going to be up as much. You see what I'm saying? You're still not going to be up as much. Where if you have a 2 to 1, I'm not sure how these percentages work, but if you have a 2 to 1, you don't have to be, you don't have to have, if you have a 2 to 1, 50% win rate, you're profitable. You see what I'm saying? If you have a 3 to 1, you probably have like a 40% win rate and you're still profitable. You see what I'm saying? So when you have a higher risk to reward ratio, you don't even have to be right as much, right? And then also, whenever you have these tight stop losses, whenever you're wrong, you lose so much little. So remember on, I think it was Tuesday, last Tuesday, I was wrong, but I was so close to the structure that I was so close to the top structure, because remember I was thinking it was going to be a manipulation, right? So say if I was thinking right here was the manipulation and we started to get these red candles and then at this wick, right? Stay with me. Say when we broke out of this say when we broke out of this area of support, making it, we made it resistance, right? So I didn't obviously think this was going on, but just for the example, say if I thought this was manipulation, right? Say if I thought this was the area of manipulation. Say if I thought this was the area of manipulation. My risk to reward, okay, I'm trying to find it. Okay, right here. Stay with my beautiful people. Say if I thought this was the area of manipulation, I got these 2 red candles coming down right here, then I got this wick right here basically being my pullback, right? Remember, I don't think this was actually happening, but just for the example, say if I thought that was happening, this was manipulation, and I thought this was a 2 good red strong candles, and then I thought this was a little retracement before eventually dropping down further, right? I would have got in at this wick, but you see how my stop loss is at the top right here? The stop loss is so tight because I know if price breaks up, it doesn't want to go back down, right? Because it's breaking structure to continue up, right? You see what I'm saying? So your stop loss is so tight, not just because you want it to be, because it's at the top of your structure where you know price shouldn't break if it wants to continue that way. So you see what I'm saying? How this stop loss is so tight, you're not going to lose much. You see what I'm saying? And that is one of the things I ran into on Tuesday. Please, that's why you guys got to stay with me and watch these videos, because sometimes I have to refer to these previous videos and you might not have watched them, right? So on Tuesday, where I thought manipulation was happening, I was basically at that. I was so far up that I was so close to that structure where I thought manipulation was, where if it broke it, I'm knowing that, okay, price doesn't, it's not actual manipulation. Price doesn't actually want to continue down, right? And I lost $33. Such a tight stop loss. You see what I'm saying? Only $33. That is not bad at all, because I was so close to the structure. You see what I'm saying? So tomorrow, what can I see? Actually, you see this 1 minute, price could want to continue down, have a little down, tap this fair value gap, and then want to continue up. Because remember, I do see this relief rally still going on. I could still see us continuing a little bit of a relief rally. And we don't have this resistance to this 553 area. So I could see us continuing this relief rally going into next week also, because we have earnings, which I'll show you what earnings we have, and then I'll go over the economic news. I'm not sure what economic news we have coming out, but we'll look over it together, okay? And so I can see us coming down, trying to touch this fair value gap before trying to continue pumping up to and get to this resistance, and then potentially breaking that resistance, making it support, or I could see us actually just breaking down, giving us a little downtrend to this area of support before continuing that uptrend, okay? So I'm reminding you guys, because there will be a lot of retail traders, and that's exactly what it is. You see is not a lot of volume. So you do have big money buying it up a little bit, but you also see a lot of retail traders seeing price pump up, and they don't want to miss the move. So also that is going to continue up in the price. And then when you see these big, strong seller volume, that's institutional money selling on us, right? So that's why I'm reminding you guys where this is just a little bit of a relief. We're not out of the woods yet. So I don't want you guys to be, because we're all retail traders, but I don't want you guys to be the retail traders that lose the money by just throwing all the money you have in, thinking that we're completely out of the woods and we're going to pump up to all-time highs, right? Because we're not out of the woods yet. We still have a lot of uncertainty. We still have recession risk on the table. We still have the tariffs on the table, right? So we're not out of the woods until those things get worked out, and that could be a little while, okay? So right now we could potentially see pumps, but remember we have this big 570 area where we could be trying to pump to, and that's where we can get that big sell-off, okay? But we're still gotta watch the news because we never know what Trump is gonna say. Tomorrow he could say that the deals are worked off, and we will start to pump to all-time highs, or he could say, you know what, we're not making a deal with China, and we will see that lower low before even get to this 570. Okay, so remember we got to continue watching the news and stay on top of these things. Okay, so that's what I can see to tomorrow, because I potentially see us continuing this relief. Remember, just a relief. I can see us continuing this relief, so I can see us continue trying to pump up and give us some more upward action before, if we don't get the news before our second quarter, before our second quarter of negative GDP. We have, remember, if we have that second quarter of negative GDP, that is in recession territory. So I could see us giving a pump up before that second quarter. And if Trump doesn't work out these tariff deals, and if we still get a bunch of bad news and we have negative GDP, we will fall and make a lower low, okay? So between now and that June area, I could see us giving a little pump up and giving us a little bit of relief, okay? So tomorrow I can see us pumping up a little bit, trying to itch towards this resistance and potentially breaking through it, and continue pumping up, okay? And so real quick, let me just go through what earnings we have, because we do have some big earnings coming this week. And so Monday, we don't really have much to really worry about through earnings. Monday, we don't have much to worry about through earnings. Tuesday, Starbucks, Snapchat, not too big. But Wednesday is gonna be the mover. Wednesday is gonna be the big mover day. We have Microsoft earnings, we have Meta earnings, and we have Robinhood earnings. So that is gonna be a big mover. And then Thursday, which is May 1st, we have Amazon and Apple, Reddit. I'm not sure what Riot is, but Reddit, Airbnb, Big Bear, Roku. So Wednesday, Thursday, we have some big earnings coming out. And then Friday, we don't have no earnings. So we could potentially see a big week, right? Wednesday, Thursday, Friday, we can see the market giving us some pumps, right? And so, remember, last week, we're kind of just, we didn't take the risk and get in at the areas where we knew we should have gotten at. We didn't trust our strategy. But that's also good for the psyche, showing us that our strategy works and what we're studying and going over works, okay? So that's why we're going into this week with major confidence. We're up 130 on the week. Remember, that is breaking out of that slump we've had, right? Because we've had a slump of 2 weeks losing money. But now we're back on the right track. Now we had a good positive week, plus 130 bucks. And now next week we're going into going in with confidence, and we're going to trust our strategy. We're going to stick to our disciplines, and we're going to capitalize, okay? We're going to have the risk management. We're going to have our disciplines. We're going to have our stop losses, and we're going to stick to all of those things, okay? So we make sure we're on the right track, okay? So real quick, let me see what news we have going into tomorrow. Tomorrow is the 28th. I don't know why it put me all the way to Tuesday. Okay, so tomorrow, what news do we have? We don't have no news. So tomorrow we have really nothing. Oh, Treasury refunding refinancing estimates. So this is kind of above my understanding, but I know Treasury yields and bond yields, that is kind of out of my understanding, but I know that will be a little bit important. So we will be looking through the news, and this is actually at 1 p.m. of Western, but 2 p.m. Eastern. And so that would be that would be out of the range we trade. So that kind of won't really be too important on us, right? But we will be looking at the charts, right? and we'll be ready for tomorrow. Okay. So I hope I provided some good information for you guys. I hope you guys learned a little bit what I was trying to show you guys and teach you guys, and I hope this video was helpful for you guys to go into Monday and see what you and help you guys to know what you're looking at and waiting for the possible moves. Okay. And so that's pretty much it. I don't want to make this video too long, even though it is pretty long. It's a 45-minute video already. And remember, guys, I love every single one of y'all who are with me on the journey. Remember to study so you guys know what you're looking at, so you're not gambling. Make sure to have risk management. Make sure you have discipline. Make sure to put your stop losses right, because you do not want to blow up your account being stubborn and not wanting to take an L. Remember, L's are part of the game. You gotta be able to take the L's and hop back on the horse and continue to learn and continue to get better. But ultimately, you got to be able to cut your losses quicker and let your runs run, right? So you want to cut your losses quick so you don't lose as much money, but you want to let your wins run as long as possible so you can make sure to squeeze all the juice out of that lemon. Okay. So remember to do those things. Have risk management. Make sure you study so you're not gambling. Make sure you follow your strategy and follow your disciplines. All right. I love every single one of y'all who is sticking with me on this journey. All of y'all's likes, comments, and even subscribes mean a lot. And remember, guys, stay persistent, passionate. Make sure y'all get paid. All right. Peace.